let's talk about other things that have to do with real estate that can help you. And one is a wonderful gift that's been given to us by the government, believe it or not. It's something called a 1031 tax deferred exchange. How you can defer your real estate tax that you might have made like a profit.
On an investment property.
Only on investment properties.
This is a gift that the government's given to us. It's been in the law basically since 1921. The more modern version came around in 1954, but it's a very powerful tool that investors can use to keep capital in their pocket and not have it go way back to Uncle Sam. So a 1031 exchange is a type of tax deferral tool that investors use, and this can be done on commercial property, this can be done on residential property, but it does have to be held for business or investment use. And when you sell one of these properties, you're typically used to seeing, taxes come out of the sale when you file for that year. This can include capital gains tax, depreciation recapture tax, state and federal level taxes, the 3.8% healthcare tax, all of that starts to hurt a little bit. And what the government decided to do in the Revenue Act in 1921, and then again in the Internal Revenue Code in 1954, is to provide investors the ability to get back into reinvesting those funds from those sales without the taxes having to be taken out for that particular transaction. So it's meant to inspire reinvestment back into communities, to have more productive real estate out there in the community. And it's a tool that, again, keeps that capital in your investor's pocket to get them into bigger and better things. It's a really powerful tool that can accomplish a lot of different purposes without having to take the tax out.
And just so everybody knows too, this deferred status, which will go to a new property, Stephen, you can allude to, the tax is still there, but you can continue to push it down the road if you are able to do 1031s on each one of those properties moving forward.
You can do it practically indefinitely, really. I mean,
Exactly right. IRS has allowed investors to utilize this tool repetitively across many different years, even until, as Brendan said, indefinitely, until you actually pass away. So these taxes end up never having to actually be paid by these taxpayers in a lot of cases, which is really powerful, because now what you're doing is utilizing a 1031 exchange as an estate planning tool. And instead of handing the government taxes, hundreds of thousands of dollars in taxes over the lifetime of your investment process, you're able to hand that to your beneficiaries in capital. So it's a really powerful, really useful tool, and very important for investors to know that this option is available if you're selling something to buy something.